Welcome back to Explain the Charts, where we take a deep dive into the markets, combining the latest news with technical analysis to understand the potential movements of assets. Today, we're examining EURUSD, the most traded currency pair in the world, and we're looking at September 17, 2024, to see what the markets are telling us. First, let's take a look at the latest headlines surrounding EURUSD. Recent news suggests that the Federal Reserve, Fed, is anticipated to cut interest rates by at least 25 basis points, potentially narrowing the policy divergence between the Fed and the European Central Bank, ECB. This could potentially support EURUSD in the near term, as investors might favor the euro over the US dollar, but the long-term outlook remains uncertain. The U.S. economy is expected to outperform its European peer in the long run, which could limit significant or sustained weakness in the U.S. dollar. Now, let's turn our attention to the EURUSD charts, starting with the daily chart. The daily chart reveals a recent upward trend, with the EURUSD pair pushing above the 1.0950 price zone. This indicates that bulls are in control, and the euro is gaining strength against the U.S. dollar. However, the daily chart also shows a strong static resistance area around 1.1140, which could act as a significant barrier for further upside moves. If the EURUSD pair breaks above this resistance level, we could see an advance towards the 1.1200 figure. On the other hand, a pullback could bring the pair back down to the immediate support level at 1.0950, with further support at 1.0890. To gain a deeper understanding of the short-term dynamics, let's switch to the 1-hour chart. The 1-hour chart shows that the EURUSD pair has been consolidating recently, with price action moving within a relatively narrow range. This consolidation phase could suggest that traders are awaiting further confirmation before making significant moves in either direction. It's important to look for potential breakout signals on the 1-hour chart, such as a strong move above the recent high or below the recent low. Let's zoom in on the last few hours of trading on the 1-hour chart. We can see that the price action has been bouncing between 1.1090 and 1.1120, suggesting a battle between bulls and bears. If the pair breaks above 1.1120, it could signal a continuation of the upward trend, while a break below 1.1090 could indicate a potential reversal. For an even closer look at the current market sentiment, let's move to the 15-minute chart. The 15-minute chart reveals a series of smaller candles, indicating a more volatile market environment. We can see that the price action has been fluctuating around the 1.1110 price level, but the recent trend appears to be slightly bullish. Traders should pay close attention to the momentum of these candles, as rapid price movements can occur in this time frame. Looking at the current price action, the EURUSD pair is testing the 1.1120 resistance level. If the pair breaks above this level, we could see a surge higher towards the 1.1140 resistance zone. However, if the pair fails to break above 1.1120, it could potentially pull back towards the 1.1090 support level. It's also important to watch for any major economic releases or events that could trigger significant price movements. To summarize, the overall picture for EURUSD is cautiously bullish, with recent price action indicating potential for upside moves, but the market is consolidating. Key levels to watch include 1.1140 resistance, 1.1200 potential target, 1.0950 support, and 1.0890 support. The likelihood of these levels being reached will depend on the Fed's interest rate decision, the performance of the U.S. and Eurozone economies, and any unexpected events. Traders should remain vigilant and monitor the charts closely for any significant changes in price action. Remember, this is not financial advice and trading involves risks. Always conduct your own research and consult with a financial professional before making any investment decisions. Thanks for watching Explain the Charts, and stay tuned for more in-depth market analysis.